Hey guys, it's Trevor Laird here, and welcome back to Exscudo Talk, episode number 3. Now, this week we're going to start out, of course, announcing our EON giveaway winner, then diving into the exchange marketplace where we have some exciting metrics to give you about EON. We're going to talk about altcoin season. Is this even a real thing? Is now a good time to invest in altcoins? Does that make any sense historically? Of course, with that, we're going to talk about 8 common mistakes that people make when investing in crypto for the first time. But let's not delay anymore, and let's get started. Now starting out with our EON giveaway. Does your address end in 9PXSS? Well, then you are the winner of $10 worth of EON this week. Check your account now. I've sent you a message on channels and that money is on its way into your account. Now, if you guys want a chance to win the $10 worth of EON given away every week on this channel, make sure to, number 1, subscribe, and number 2, post your EON address in the comments section below. Now on to our Exscudo ecosystem health check. Everything is good to go as of right now. Now, one thing I do want to point out that last Sunday and Monday, there were reported downtimes on the exchange. We talked about it last week. I did test these out coming up on Tuesday, and the issues seem to be worked out by the team Monday morning. So a little bit of downtime there, but nothing else really going on right now. Now on to our exchange market news. Things are looking really good this week, except for volume has stayed pretty stagnant around 200,000 USD per week. We've ranged about 200,000 to 250,000 USD being traded across all pairs. Now, of course, we want it to be, you want to really add a 0 to that to get back to our pre-COVID numbers, but I'm happy seeing steady exchange volume right now. Now, of course, before we go into the main pairs that took that volume, we want to look quickly over at EON BTC. Now, if we look over at this pair, what we're going to see is that EON has taken a price increase. And if you guys remember last week, I was talking to you about the way the order book depth goes and the way that the price point was sitting around 1 million EON per BTC, or even 750 within the last week. This is not sustainable at all and not representative of the price of EON because the volume was so low on that and the order book depth was so little that we are able to see a very rapid price recovery. And this week, I am happy to say that price recovery did happen. We saw EON drop back to the 290, so 290,000 EON per BTC. And the next resistance levels, guys, are not going to be that hard to achieve. We're going to have a resistance level at 190 with about 1 BTC. And then there's a big resistance level with about 7 BTC being traded before we hit 100,000 EON per BTC. Now, I am going to advise this week, this is not a good sell time for your EON just because the market book depth is not there. We did hit our minimum targets this week for following this pair, but again, there's not a ton of market depth there, so you might want to hold on for now if it is time to sell. Now circling back to our 2 top pairs for the week, doing about 70,000 USD each, most of it being on the 16th and 17th. We had BTC USDT, which we saw there ending the week about 8,900. Now that doesn't really make a lot of sense to you since the average price that we're seeing is over 9,100 across other exchanges. But if you look, even though somebody did buy into this at the $8,900 level, that does not have any market depth, so I would not recommend trying to arbitrage there. You'll see a similar story over on BTC Euro, where it had slight reductions this week, with of course Bitcoin having a few issues after that Twitter hack. So after about 8 years of watching cryptocurrency patterns, it's really interesting to see people saying, oh, it's altcoin season, it's time to buy altcoins. And this is historically from the idea that kind of around springtime, you'll see a lot of new altcoin projects come out, and altcoin is any coin that is not the daddy of cryptocurrency, which is Bitcoin. Now, this might have been true for a couple of years, kind of 2016, 2017, and even a little bit into 2018, but not as much. This might have been true, but I don't think this is true today. Now, of course, we do see on the charts behind me, thanks to Coin360 here, that we do have some really big gains. We had an Ethereum token, Chainlink, have a bit of an announcement of a partnership, and then they had a pretty substantial rise there. We see Stellar going up in their regard. Eth not as much, but there are a few, like XRP, there are a few other altcoins that are really taking a solid rise. Now, of course, COVID did mess up a lot of this for traditional markets. Nobody really knew what was going on. But the way that people think about it right now is maybe that there's a certain time of year to buy altcoins, and then, around Christmas time, everyone buys Bitcoin, then the price goes up, then come January, it drops. This may have been true, but I want to tell you guys, the big problem with following any sort of buying philosophy like this is that everyone seems to know it. And if you think that that's going to happen and everyone knows it, not everyone can make profitable decisions. Not everyone can win in this space. It just doesn't work like that. So if everyone's doing it, it's probably not going to be the best strategy to follow. I think that this whole idea of altcoin season has really disintegrated over the years, and especially with COVID, the whole market is disrupted. By all metrics, Bitcoin after the halving should have taken a massive jump, but to match up the requirements of the miners to even keep mining. But this is not what happened. So do not count on proven strategies, because this cryptocurrency in general, what we're doing right now, what we're talking about, is very, very young, and it's really finding its place. So do not solidify any patterns in your buying. Look at the projects, look at the white papers, look at where they're currently at, look at what they're trying to do, and make your decisions based off that. But this will be a natural segue into our next topic, which is 8 common mistakes that people make when buying cryptocurrency. Now, there are a lot of mistakes that people make when investing in cryptocurrency, and a lot of it is not, everyone thinks it's probably new users who are getting in, or new investors, but it's not. It's new and casual users, it's experienced users. Everyone can make mistakes when investing in cryptocurrency because it's such a rapidly changing marketplace. And now, of course, the first one really is a no-brainer. It comes down to not doing the research first. People maybe are arbitrage traders, or they're used to day trading in stocks, and they just jump into crypto thinking it's going to be either similar to USD or another fiat pair, like if they're trading on those fiat markets, or they think even crazier that it's going to be similar to a stock price. It is definitely not. The cryptocurrency market, as we said before, is very, very young, and it's really finding its place as an economy-based market that also has company connections that have that newsreel effect on the currency price as well. So what you can do, the number one thing you can do here is do your research first, and there's a couple of great links in this article. The second thing people do here is they invest in great ideas. If somebody said, I'm releasing a cryptocurrency with the goal of curing cancer, that sounds like a great idea, but does that mean you should invest in that? Does that mean that there's any sort of guaranteed outcome? No. The entire thing has to be a complete package with a plan for success, a team to execute it, the technology, they have to be solving a problem, they have to be competent, and all of these things have to come together, and not just, it can't just be one thing that you really want to invest in. You have to look at the whole picture. Now, the next thing we do see is people always investing just in cheap coins. They'll basically take the list of cryptocurrencies, they'll associate it by price, they'll look, okay, this one's 0.01 cents. I can't go wrong, because if I invest in this and it does go up to say $1 or $2, then I'm going to make so much money. The potential for growth is so much higher. Now, this might mathematically be true, but the problem is that the majority of these cryptocurrency projects fail within 1 or 2 years, especially Ethereum, like Ethereum tokens and things like that. And they don't make it to those heights that you could imagine, and you'll end up losing. So having a stack of cheap cryptocurrencies does not make sense. It's okay to be part of your portfolio, but it shouldn't be all of it. And we'll talk about balancing your portfolio in a few minutes here. Now on to our fourth reason, following the crowd. So this seems like, okay, I'm going to follow the moving average of what all the other investors are going to do, because then I'm going to be able to ride that wave up. But what happens if everyone does that is a bubble, because suddenly the volume will stop. The actual currency itself won't have the value required to really keep it going. Like, there's not a reason for the growth. It's just because the crowd is doing that. You'll see that a lot with the pump and dump scams that are out there. I'm sure you've been invited on Discord to all these groups, like, okay, we're going to let you know, and then we're going to push it 200%. Then everyone's going to get out and make it, and then it's going to tumble and still be a bit higher. There's no perfect reason like this that will work. And by following the crowd and just going along with what other people are doing, you're probably going to be on the losing side of your investment. Now on to the fifth reason, using the wrong cryptocurrency exchange. Do you know that there are over 1,000 cryptocurrency exchanges out there right now? Probably even more that are hidden within the shadows. That is a big choice. Now, you could just go with the biggest guy But I don't see that making too much sense because there are different exchanges that are in different countries that have different benefits and losses. But the way to know that something is really wrong is if you go to an exchange and they say basically no fees, no KYC, no sign up, no nothing. You can't track it all back, and they show exorbitant volumes, great prices, everything like that. You should probably ask yourself, is this too good to be true, and do a bit more research. Now, the next reason here is a very common one, relying on one single coin in your investment portfolio. This is never a great idea because of the volatility and the earliness of the market in cryptocurrency. It doesn't, even if it's BTC, it doesn't make sense to just rely on one investment. You should really spread it out. And the chart that you see up on your screen now is going to show you a pretty good way to spread it out. You have to have a mix of high and low risk assets that will allow you to weather the storm in any market condition. Now, our seventh reason here is overtrading. Every time you execute a trade, it will cost you money. There is a spread between what you're buying and selling. So if you're trading very often, you're going to have a lot of fees associated with your trading. It's better off to do your research, create a strategy, do a couple trades a day if you're going to be experimenting with it, and just stick with it. If you're going to be a long-term trader, you should really be buying on a dollar cost averaging. Say every time you get a paycheck, you put X dollars into your cryptocurrency portfolio and spread it out throughout all of the different areas that we talked about previously, instead of just trading every day, trying to keep up with the market as you're going. Find a strategy, stick with it, and you'll have clean results, and you'll be able to assess what you're doing right and wrong. And the final mistake here is the most obvious, and it's the one that gets the most people. It's not focusing on security. Number one, you should be using 2FA when available on any cryptocurrency accounts. Number two, you shouldn't copy your actual private keys onto a notepad or anything else that's not completely cold stored away from anyone who can access it, because it's very easy these days for people to search out people with cryptocurrency, get hacked, and that's it. That's why I keep everything on a hard, cold, far away from the internet device. It's a better idea, and it's a way that you guys should do it too. Well, guys, I hope that those tips did help you out. Whether you're a seasoned investor or somebody brand new, this can happen to anyone. Like, honestly, we all fall into these bad habits, and it's very easy at the beginning, or even if you just got complacent and have been doing it for too long. So take a look back and see if you have been spreading out your portfolio, if you have been doing an audit on your security, and make sure that you don't fall into one of these 8 common mistakes in the future. Well, that is it. That is all for the week, guys. Now make sure to like and subscribe. It really does help us out. And put your EON address or any EON address you want to use in the comment section below after you've subscribed, and that will enter you into our $10 weekly EON giveaway that goes out every single Sunday. Somebody will win, so make sure to get on that. I want to thank you guys so much for watching. For Exscudo Talk, I'm Trevor Laird.